The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, 11th day of December, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We are back to our regularly scheduled programming today, which means Michael will join us about 50 minutes into the broadcast. We'll start as we do with our daily devotional, a word of prayer, some news, recap of the Logic 247 alerts, the concierge trade alerts. Then when Michael joins us, he'll give us a recap of what happened in the live training room this morning, and then we'll do some live trading on the TradingView platform. Now, we do 2 live broadcasts every trading day. the first broadcast. That's our live training room, and that is reserved for members only and those taking the 1-week free trial. It's the only way you can get in there. This broadcast, on the other hand, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. It's going to log you into our platform right then, if we're broadcasting live when you do it. But more importantly, going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link at 12 noon Eastern. All you got to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there will be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. And it's easy to remember, youtube.com/CFRN. Stands for Christian Financial Radio Network, but you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, if you will, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's a great way to get to know who we really are, or how we've evolved over the years. Obviously, you're not going to watch all of those episodes, but maybe poke around. Check out 5 years ago. Check out 2 years ago. Check out a month ago. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. youtube.com/CFRN. Now, we began a new devotional topic yesterday. From humbug to hallelujah. A 5-day Christmas transformation. So this is day 2 of 5. Our scripture today is James 1, verses 2 through 12. And I'm going to share it with you from the Message translation. Consider it a sheer gift, friends, when tests and challenges come at you from all sides. You know that under pressure, your faith life is forced into the open and shows its true colors. So don't try to get out of anything prematurely. Let it do its work so you can become mature and well developed, not deficient in any way. If you don't know what you're doing, pray to the Father. He loves to help. You'll get His help and won't be condescended to when you ask for it. Ask boldly, believingly, without a second thought. People who worry their prayers are like wind-whipped waves. Don't think you're going to get anything from the Master that way. Adrift at sea, keeping all your options open. When down and outers get a break, cheer. And when the arrogant rich are brought down to size, cheer. Prosperity is as short-lived as a wildflower, so don't ever count on it. You know that as soon as the sun rises, pouring down its scorching heat, the flower withers, its petals wilt, and before you know it, that beautiful face is a barren stem. Well, that's a picture of the prosperous life. At the very moment everyone is looking on in admiration, it fades away to nothing. Anyone who meets a testing challenge head on and manages to stick it out is mighty fortunate. For such persons, loyally in love with God, the reward is life and more life. Again, that was James 1, 2 through 12. So, today's topic is a challenge to choose joy. Did you know that joy is a choice? It's the most wonderful time of the year. Or is it? Maybe Christmas felt that way when you were a kid, but for many, it's shifted over to something far more stressful than magical. Why is that? Where did the wonder of Christmas go? And it's not because you found out there's no Santa Claus. Like Scrooge, many of us experience Christmas as anything but joyful. In the rush and busyness of the season, we lose what makes it feel special: wonder, innocence, and peace. Yet Scrooge's encounter with the ghost of Christmas past reminds us that he wasn't always the hardened miser he became. There was a time when he was simply Ebenezer, a young boy with a soft heart and an openness to life, known fondly as Eben by his sister Fan. Hold for me one moment. Amazing how dogs never know when you're doing a live broadcast. Okay. But like so many of us, Eben lost that innocence. His father's poor decisions and bitterness soured the family's life, leading him to associate Christmas with pain and disillusionment rather than joy. While we might not face the exact crossroads Scrooge did, rejecting joy to avoid upsetting a parent, we all reach points in life where we must choose between embracing wonder and love or closing ourselves off with cynicism and bitterness. That choice isn't always simple. Joy doesn't just happen to us as we get older. It becomes something we have to consciously choose, regardless of our circumstances. James, the brother of Jesus, speaks to this in his letter to the early church. Dear brothers and sisters, when troubles of any kind come your way, consider it an opportunity for great joy. For you know that when your faith is tested, your endurance has a chance to grow. It's James 1, 2, and 3. Even when life feels far from ideal, we're invited to find joy. Not because everything is perfect, but because joy can become a part of our character and faith. If you've experienced hardship that has forced you to confront the harshness of life, you're not alone. Each of us has the choice, Scrooge-faced, to hold on to the wonder God designed us to enjoy, or to allow disillusionment to dim our joy. Which path will you choose? What circumstances are you facing right now that aren't ideal? Think about how you might let go of cynicism and see these challenges as a path to grow in character and faith. And think about this. Where could you uncover joy in unexpected places? Pray with me. Heavenly Father, thank you for the trials that strengthen our faith. As your word in James reminds us to consider it pure joy when we face challenges. Help us to persevere, knowing that perseverance produces maturity and completeness. Grant us wisdom to navigate difficult times, and give us hearts that trust in your unfailing goodness. We pray, God, that you would bless us with the strength to stand firm under pressure, so that we may receive the crown of life you promise to those who love you. May we honor you in every step of our journey. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. We're going to start here in the U.S. with the cash markets, or the indices as they're called. And in case you don't know, the NASDAQ has now broke 20,000 for the first time ever today. All-time historic high. All right. Currently the Dow up 26 points. The NASDAQ up 337 points, which is 1 3/4%. S&P 500 up 54 points, almost 1%. And the Russell 2000 up 17 points. In the commodity basket, crude oil up $1.39, trading 69.98 last. It's a gain of a little over 2%, or almost $1,400 per contract traded. Gold up $39.60, trading 2,758 last, a gain of 1.5%, or roughly $1,200 per contract traded. Silver up 33 cents, trading 33.07 last. That's a gain of 1%, or about $3,000 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 4 points. Shanghai rose 9, but the Hang Seng fell 156. And in the European markets at the close, FTSE up 21, the DAX up 70, the CAC up 28. So we had a mixed day in Asia. It was a green day for the UK. Not a big green day, but green nonetheless. And so far, it is a big green Radio Wednesday here in the US of A. Let's look at the news. Well, that's if my news feed. You know what? We're going to just jump right to the market news. My other news feed wants me to log in, and I don't feel like it. There was nothing major there. Nothing you haven't seen on the news. New inflation data out today showed consumer prices rose as forecast in November, keeping the Federal Reserve on track to lower interest rates again in December. The latest data from the Bureau of Labor Statistics showed that the Consumer Price Index increased 2.7% over the prior year in November, a slight uptick from October's 2.6% annual gain in prices. The yearly increase matched economists' expectations. Speaking of the Fed, a fresh inflation reading that met Wall Street expectations, the one we just talked about, is likely to keep the Federal Reserve on track to cut interest rates again next week. That's next Wednesday. But some central bank watchers believe the Fed will signal a more cautious approach to 2025 due to stubborn pricing pressures. I do think they will be slowing down in 2025, according to former Cleveland Fed President Loretta Mester. This transitional inflation has become sort of sticky. The former Fed policymaker still expects a rate cut next week, but added that a prior prediction for 4 rate cuts next year has got to be rethought. She says that 2 or 3 cuts in 2025 seems right to her. But again, she's no longer got a seat at the table. Apple, all you iPhone fans, is finally bringing ChatGPT to the iPhone, the iPad, and the Mac as part of its latest Apple Intelligence update. Available today via iOS 18.2. God, it seems like it was yesterday I uploaded version 18.1. So anyway, there's a new update. I got a full battery. I wonder if I go to here, and go to General Software Update. Okay, they haven't rolled it out in my area because I'm running 18.1.1, so maybe I'll get it tonight, 18.2. Now, the software also brings along Apple's visual intelligence feature for the iPhone 16's camera control and image generating technologies called Image Playground and Genmoji. The second update in what is expected to be a series of artificial intelligence related improvements to Apple's stable of products over the next several months. The software provides some of the most anticipated AI features for Apple Intelligence. And as a result, Apple stock's up almost 2% on the day. No, I'm sorry, up $1.90, almost 1%. Now, I think I told you guys this story. I have T-Mobile on my phone and my wife's phone. And I kept seeing all these commercials about, oh, switch to T-Mobile and we're going to give you this and we're going to give you that and blah, blah, blah. So I called them up and said, you know, I'm feeling a little hurt. Huh? I said, on TV, you keep offering all these people stuff to switch to T-Mobile. I've been a loyal T-Mobile customer for years. What do I get? He goes, let me do some checking. Looks like you and your wife both have an iPhone 11. I said, that's right. He said, how about I send you guys both an Apple or an iPhone 16? I'm like, oh, okay. And how much is that going to cost? My bill went up $5 a month. So, if that's you, give them a call. You never know what might happen. Something good. Sometimes good things happen to good people. Alphabet's Google released the second generation of its artificial intelligence model, Gemini, and teased a slate of new ways to use AI beyond chatbots, including through a pair of eyeglasses. CEO Sundar Pichai, in a blog post, dubbed the moment as the start of a new agentic era. I wonder if he invented that word, referring to the virtual assistants that can perform tasks with greater autonomy. They can understand more about the world around you, think multiple steps ahead, and take action on your behalf with your supervision. The releases underscore the methods by which Google is aiming to reclaim the lead in the race to dominate the emerging technology. Microsoft-backed OpenAI captured global attention when it released ChatGPT back in November of 2022. Wow, it's been around 2 years. Google, on the other hand, unveiled Gemini in December of 2023 and now offers 4 versions. Today, it also released an update to Flash, its second cheapest model, with improved performance and added features to process images and audio. Other models will come next year. OpenAI has in recent days announced a flurry of new offerings to diversify its prospects, including a $200 a month ChatGPT subscription for advanced research use and the availability of its text-to-video model, Sora. Now, I probably mentioned this already. Ray-Bans. You know, the classic Ray-Bans? You can get smart Ray-Bans now from Ray-Ban. They can take pictures, they can take videos. I'm not sure what all they can do. I should research that and give you all the details. And they're only about $300. Ray-Bans aren't cheap anyway. But you know what? I'm better off with the dollar store sunglasses that look like Ray-Bans, because I sit on them, I step on them, I leave them places. From Bloomberg, premiums for gold and silver futures in New York swelled as traders weighed the possibility of precious metals being included in sweeping tariff measures proposed by President-elect Donald Trump. Gold futures for delivery in February traded as much as $60 an ounce, or 2% over spot prices in early London trading, while silver futures were more than $1 an ounce, or 3% higher. Go silver. The Buffalo Bills have broke new ground. The NFL entered a new era on Wednesday by allowing the first investments by private equity firms in teams. League owners voted to approve the sale of two 10% stakes, the maximum allowed to be acquired by institutional investors under new ownership rules set earlier this year. The Miami Dolphins are selling to Aris Management, while Arctos Partners is acquiring a piece of the Buffalo Bills. The move has the potential to boost team valuations that had already been surging. Owners have said adding another pool of deep-pocket investors will help fund big projects like stadium renovations. The Eagles are selling 8% to two investor groups for $8.3 billion. Wow. Next from Bloomberg, Blackstone Incorporated's IQ student accommodation business has bought a plot of central London land out of receivership after its previous owner defaulted on a loan from the billionaire Reuben brothers. The 1.4-acre plot, the former Blackfriars Crown Court in Southwark, changed hands at a significant discount to the value of the outstanding debt, people familiar with the matter said, asking not to be identified as the information is private. The project had a book value of about $64 million and a total outstanding charge of $80 million. The site earlier got permission to be redeveloped into an ambitious 430,000 square feet office project, complete with a sprawling roof garden and swimming pool. But the private equity firm now plans to develop it into student dorms. The deal, which was signed today, is the latest in a string of transactions that have seen planned office projects ditched in favor of alternative uses, including hotels and student accommodation. Now, I've been bearish on commercial real estate for a few years. Apparently they are too. Reuters. What does Reuters have for us today? President-elect Donald Trump is expected to adopt pro-growth policies that ease U.S. banking and credit card regulations while spurring deals, industry executives said on a panel at the Reuters Next conference in New York this morning. Barclays U.S. Consumer Bank CEO Denny Nealon said, "I hope the new administration will use this as a point to do a reset. There are some things, like the Credit Card Competition Act, that could destabilize the credit card market and ultimately hurt the consumer. Goodness gracious, credit card rates are like 28%. How much more damage can you do to the consumer?" Oh, you should never ask that kind of question, because you'll usually find out. Yeah, you don't ever say things like, well, it can't get any worse. That's inviting trouble. And last from Bloomberg, Donald Trump is slated to ring the New York Stock Exchange's opening bell tomorrow morning, presenting a president-elect who has vowed to rejuvenate the U.S. economy, a celebrity photo opportunity at an iconic symbol of American capitalism. And there you have it. That's the news. Now, let's bring it home with Logic 247. That would be our 24/7 around-the-clock E-mini alert service. But it's not just E-minis. It's also crude, gold, silver, bonds. Over the last 332 weeks, we have issued over 18,600 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, this recap was done by Valerie this morning at 6:30 a.m. Eastern. So some things have changed. I've put out some additional alerts. So she'll reconcile it all this afternoon and update the recap and post it in Telegram as she does. But at the time she did the recap this morning, since the markets opened Sunday night at 6 p.m. Eastern through 6:30 a.m. this morning, we issued a total of 42 alerts. One never triggered. Still waiting on the outcome of 8. That gave us 33 actionable alerts, of which 2 or 6% would have been stopped out. Again, based on market structure and that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, the logic alerts, yeah, you can trade them, but the real purpose is to teach you how to read a chart. You see, when I send out a logic alert, it's got an entry price, an initial target, additional target sometimes, and a final trade to target. What you should be doing is taking those alerts and opening a 30-minute chart. Draw a horizontal line at the entry, a horizontal line at the initial target, a horizontal line at any of the additional targets, and then the final trade to target is always going to be a weekly trading zone. This shows you how I have spotted potential support, potential resistance, and defined the windows of opportunity between the two. So make sure you use them to learn, because if you want to trade for a living, it's never going to happen until you first learn how to read a chart. Period. Or maybe I should have said exclamation point. But as a bonus, you can also trade them. Now, the logic alerts can come out anytime around the clock, 2 a.m., 2 p.m., as opportunity presents. Futures trade around the clock. We have traders around the globe. So our day session is their night session, and vice versa. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts, or the CTAs, as they are called. If you're a member or trial member, you have access to this information. Make sure you read it and understand it, and if you don't, ask so I can clarify it for you. Now, this report is published as a static. This is published as a static report shortly after the Globex Open each evening. So logic alerts can come out anytime, but the CTAs are published once per session. Now, here lately, I've done a pretty fair job of getting them out right at the open. But in the past, it's been more like 6:20, 6:30. And some nights, if I'm away from the office, then it could be considerably later. But what I want anyone watching this to understand is that all of our members and all of our trial members had all of these targets last night the moment the markets opened. S&P 500 E-mini, the Dow, the Russell, crude oil, NASDAQ, gold, silver, and bonds. Now we're going to go through the charts and we're going to look at each and every one of these markets and each and every one of these targets and see exactly what happened. First, we're going to take a look at the daily chart. And I published a chart in the discussion group this morning. Price was trapped. The high of the day was at the black step line. The low of the day was at the 62% fib extension. So my point was price has got to do one of two things. It's either got to break through the potential resistance of the daily step line or break through the support of the 62% fib extension. Now, I didn't say which it was going to do because I didn't know which one it was going to do. But now we can clearly see what it did. It's now up against resistance at blue and climbing. See, when you've got something like this, on whatever time frame you're using, price, step line, blue and climbing, that's what I call the perfect stack. Okay. Once that step line hooks over, crosses blue and climbing, then price typically comes back to the BBC. Now the pullback to the BBC holds more often than not. BBC just stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Now whether you're pulling up from below or pulling down from above, the pullback holds more often than not. Now we know eventually it'll trade through, okay? But it's in this instance here, 1, 2, 3, 4, 5 days, the pullback held. All 5 of those candles touching the BBC. Now markets are fractal in nature, so is the BBC. You can put it on a daily chart, a weekly chart, a monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart. And the results will always be the same relative to the time frame you're using. You can put it on stocks, crypto, Forex, ETFs, doesn't matter. Okay. Price gets above the green line, expect higher prices. Price gets below the green line, expect lower prices. Always relative to the time frame you're placing it on. In other words, don't put it on a 1-minute chart and expect daily results or vice versa. Now, the other reason we're looking at the daily chart, institutional traders, the ones with huge accounts who trade in huge size, they move price, not us. So whether you trade futures or stocks, crypto or Forex or ETFs, if you'll just spend 2 minutes with the daily chart of whatever you're about to trade and gather information, you are able to see things that the institutional traders are seeing. Okay. All the institutional traders knew that on the daily chart, the S&P 500 E-mini futures was sitting on support. That gave them the confidence to drive it up, okay, through the step line. Now we've run into the next obstacle. If we trade through blue and climbing, now I just mentioned that we have a new all-time historic high already today in the NASDAQ. We just might get a new all-time historic high in the S&P. Would that surprise me? Yeah, a little bit, but hey, we don't claim to know what's going to happen next in the market. But if you take a look at the Logic 247, 80% of the time, we do know with a great deal of certainty what the next high probability move will be. And 20% of the time, it's not that we don't know what we know, it's just that the market doesn't always do the next high probability thing. And part of learning to read the charts is knowing what the next high probability thing is. You'll know you've learned how to read a chart when you can look at any market, any time frame, and instinctively know, with our humble set of indicators, what the next high probability move is. So you're getting a free look over the shoulder of the deep pockets to see what they're doing. Okay? Have they been doing any selling this session? No, not a lot, right? But you're also able to identify. See, on your range chart, you don't know that the all-time historic high came in on at 6107. This is 6111, okay? And that was on December 6th. You'd have to do a lot of scrolling back. But this daily chart makes it all real clear. Now, the daily BBC has just gotten above the 50% fib extension. So if the institutional traders don't want to carry this home overnight, you'll see a drop going into the close. If they're confident, then we just very well may put in a new all-time historic high today. Alright, this is the 30-minute chart. All alerts, logic, and concierge are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And if it's not broke, maybe you should leave it alone. The vertical line separates today, Wednesday, from Tuesday. Here's Monday. When price encounters a weekly trading zone, 70% of the time you're going to get consolidation. 20% of the time you'll get rejection. 10% of the time you'll get the slice. Like this candle here. Slice through this 30-minute candle. Slice through the zone like it wasn't even there. But when it ran out of steam, it reversed back to the zone it sliced through. Then continued in the direction of the slice. Those are the three things. Right here, we had a slice. We pulled back to the zone. That zone is 6081/82. Okay, see how it sliced through, pulled back, continued. Now what's it doing? Consolidating. More important, the step line is, now see, on the way up, perfect stack, price, step line, blue and climbing. Did you see how the step line is getting on the right side of blue and climbing? If we consolidate one more candle right here at the zone, when price moves up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support till proven otherwise. So if we consolidate one more candle at this zone, the step line is going to cross blue and climbing. Once that happens, you should anticipate a retracement back to the BBC. So this was the opening candle last night. The moment this candle opened, everyone had the targets. This candle opened at 60.5275 and dropped to a low of 60.49.5. There's enough to get your goal for the day. Then we went sideways. Red and falling turned to blue and climbing. We hit the BBC resistance. So we drop back down and you'll notice the low of this candle and the low of this body, that's this low right here. That sent us back up to the BBC where we consolidated. Blue and climbing took us up and away. Now this time we sliced through the zone and we didn't retrace. Okay, Very few things in trading are 100%. But if you can find something that will work for you 75, 80% of the time, you should stick with that, whatever it is. So we powered our way up through this zone, and now we're at this zone. And right here we had a bearish cross back on Monday. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. So we'll see what happens. The stage is set. All right. Monday, Tuesday, today. All members and trial members had these targets last night, the moment the markets opened at 6 p.m. Eastern. So we kind of went sideways, and then we hit the target, overshot it by a tick or two. Support, you see that's based off this low right here. That's market structure. That bounced us up. Now, you wonder, okay, this really looks like price is headed to the zone, right? So what could have happened? What could have caused that? When the red line gets below the green line, that's called a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. That's very reliable. Not 100%, but very reliable. So that resistance sent us back down to the short target, support. That bounced us up to the BBC. Price is above the BBC, but we've got red and falling. Well, it's actually red and sideways. So the trade I would look for here would be 44,410 up to 44,430. That's enough to get your goal for the day. Or you could do it the other way. 44,280 down to 44,260. 44,280 to 260. Goal for the day. Russell. This was the opening candle last night. Kind of went sideways. Now price always reverts to the mean. In our case, the mean is green. We call it the BBC. When we pull up to it, we expect resistance till proven otherwise. And that resistance sent us right down to the short target, to the tick. I think it's to the tick. No, we missed it by one tick. Okay. Oh, fair enough. All right.
Okay.
You ready to do your thing?
I am. Hang on, let me just type my name in here. You can hear me okay and everything?
Yep. Sounds
fine. Was that good all morning?
Mm-hmm.
Excellent. All right. I am ready. Let me get the question box out so I can see it. And I am ready.
All right, guys. When I come back, we'll pick up and we'll finish the recap of all these, of the rest of the markets. And we will also wrap things up with our good word for the day.
All right.
I'm trying to get this. There we go. Okay, looks good.
Good. All right. Here we go then. Good afternoon, everyone. Today is Wednesday, the 11th day of December 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. When you click on that purple button, there's no credit card required for the trial. Click on the purple button, and that will bring you to this page, this registration page right here. On this page, all that we ask for is your name, your email, and your phone number, 5 multiple choice questions, and if you have Ninja, give us Ninja Trader Machine ID. Now, only do that if you're going to use Ninja for charting. We don't have all the stuff on the Ninja platform, but if you want to use the old stuff that we have, you're welcome to do that with Ninja. But we have all the stuff that we use on the TradingView platform. All right. Everything that we normally use is on the TradingView platform. So if you want to use that, then just give us your TradingView login ID. All right. If you want to use TradingView and you don't have access to it yet, go here to mytradingiq.com and click on Trading Platforms right here. Right here it says TradingView platform. Click on that. Watch the little video. Click on this, and you'll get a 30-day free trial to TradingView. Now you're going to have to pay for live data for TradingView, but you get a 30-day free trial to the actual indicator set. All right. And it's not expensive to use. You know, if you click on that and you go here to the monthly fee, it's $14.95 for the indicators, and then it's $7 a month for the data. So you're going to be paying, you know, $22 a month, under $30 a month to have something that can change your life. It's pretty good costing. You know, I just went and got meals. I drove through the drive-through. That cost more than $30. And that's not going to change my life at all. Not for the better, anyway. Anyway, that's how you do that. All right. So this morning we had a pretty good morning, and we actually covered a lot of stuff this morning. For those of you guys who are already active members, if you go into the Telegram channel, this one right here, the Logic 247 Active Passport Holders Group, I pinned a recording of this morning session in there, so you can go and watch that right there. It's about 49 minutes long, but I covered a lot of stuff in that session. I was able to pause it, and then we'd get talking, then something good would come up. And I mean, it was all good, but I wasn't so far down the rabbit hole, and something I found worthy of recording was in there. I would turn it back on and record it. So I think it's a pretty good recording, though it's in pieces. So what we did this morning, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 11th day of December, 2024. We made 99 ticks on the NQ, 12 ticks on the Russell, 39 ticks on gold, and 8 ticks on the ES. That put us at $1,045 with one contract this morning. Today took 4 minutes and one trade to get to the goal for the day. At that point, we were up $2,820. Now we took a total of 9 trades this morning. So on a month now, we're at $2,800 over 8 business days, averaging $350 per contract per 2-hour business day. On the year, we are now at $114,867. That is with one contract. $114,867 with one contract on the year. That's over 232 business days, and we average $495 per contract per business day during the whole year so far. All right, we got our goal on 231 out of 232 business days so far this year, and I showed this morning, it's in that recording, I think. I showed this morning how if we would have done the divergence trade that I've been showing everybody, how that would have worked out to give us the goal for the day pretty easy, pretty early on with just the ES on that particular day. And the ES was one of the ones that dragged me down on that day. That was last week where I had this yellow day. In the first, well, the ES alone had like 5 total points that we could have gotten in 3 trades. So anyway, if you were following the 2420 blueprint and you would add one contract per month, well, for every $2,000 that you earn, if you had one contract per month, and if you stop trading when you get the goal for the day, the goal again being $100 per contract in this column right here. If you were to stop trading when you did that, so far this year, you would have actually earned $217,628. You would have averaged $3,136 per hour, and you would have only had to work 69.38 hours so far this year. Okay, so we're going to wrap up this year doing pretty well with all those numbers. And we also finished the 2420 blueprint at the end of August, and we averaged $7,521 per hour finishing up the 2420 blueprint. So it was all good stuff with all that. Now, let's get into the trades that we took. And I did something this morning. For those of you guys that are watching now who weren't there this morning, I did something this morning with this, and it seemed to be helpful to people. So what I think I'm going to do is create a blackout area within the TV trades thing. Create a blackout area so you'll be able to see, you know, when the blue one pops up here all by itself, you're gonna sell the open of the next bar. When the blue one's all by itself, you sell the open of the next bar. It's all by itself, you sell the open of the next bar. Even right here, you sell the open of the next bar. That one would have stopped you out. But right here, you sell the open of the next bar. Sell the open of the next bar. Sell the open of the next bar. right here. Sell the open of the next bar. So you would have sold the open right here on this gold right here. You would have sold the open right there and got your goal for the day. Pretty much every one of those, except for the ones that stopped out, would have been the goal for the day. And on the bottom, buy the open of the next bar. Buy the open of the next bar. You can see right under there, you would be buying the open of the next bar right here. You'd be buying the open of this bar right there. Buying the open of this bar right here. Right here, I guess buying the open of this bar right there. Buying the open of this bar right here. That would have stopped you out. And buying the open of this bar right there. Pretty simple stuff when you look at it like that. I think I'll try to put that together for you guys, and it'll be worth looking at. Maybe I can do it over here in the next couple hours if I have some time. Anyway, what we ended up doing here on gold this morning, the trades that we did actually take on gold, we took 3 trades. Okay, so we had some great movement on gold. You can see a great movement on gold this morning. The first trade that we took was right here. We picked up 4 ticks on that one. The next trade we picked up 10 more to get us to 14, and the one after that we picked up 15 to get us to 39. Is that right? No, we picked up more than that. We picked up 25, I think, or something like that. No. Wait, 15 would make us at 29. Yeah, 25 ticks. We did, yeah, that's right. We did get 25 ticks on that. It got to the target at 25 ticks. We got 25 ticks on that, and that got us to 39. And that was our day on gold. Now, let's put this back up here on gold. And we'll just look at where the blue came out of the oversold or out of the overbought by itself. Right here would have been a trade, right? Let's just go through this. I'm just going to take my time and do the whole thing, okay? I'm not just going to rush through the recap of what we did all by itself. I want to do this. I'm going to stretch this out too, so I can see it on the other monitor. Okay, so right here, you would have sold. Okay, and right here, you would have sold. And right here, you would have bought. And right here, I'll just go through them all because I can see it without having to do the white thing. And I'll mark them all up for us. And then we can go back and look at it. Okay. Now, that is doing the divergence trades, right? That's doing the divergence trades. Now, if you're going to do it without the divergence, then you got to be with the trend. You got to be able to see all 4 lines in the ribbon. So it would have been different places. So let's go here and we'll do a different color line, all right? Now, I'm not sure that this is an actual trade, but we'll just put one there where it might have been a trade. And right there might have been a trade. 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 Now this looks like a lot, I know, but once I get into it now, all that information is there on the chart. Okay, so let's bring price down and see what actually was a trade. Okay, so we'll just go with the divergence first. Okay, we know all the red ones had divergence. All right, what that looks like here. Actually, this red one didn't have divergence. Oh, it was on the upside. Okay, on the upside. So we're selling the up close right here. Right, selling the open. I'm sorry, not selling the up close. We're selling the open of the next bar after the red one. Selling the open of the next bar. So this is gold. So it has to go 5 ticks into profit on the 9-tick range. So it open was here at 48.3. It dropped down to 47.7. So it went 6 ticks into profit. So stop had gone to break even before it went up. Just the red ones now. You're selling the open of the next bar. So right here, we would have sold the open of this one right here. Goal for the day. We would have sold the open of this one right here. Goal for the day. We would have sold the open of this one right here. Goal for the day. Wait, this wasn't a sell. This was a buy. We would have bought the open of this one. This one would have stopped us out. Sorry. The red ones, you gotta do the open of the next bar. All right, all the red ones is the open of the next bar. So right here, we would have sold the open because we're in the overbought. Sold the open. Goal for the day. This one, we're in the overbought. Sold the open. Goal for the day. This one, We are in the overbought, sold the open, still a goal for the day right there because it went all the way down before it came back up, right? Well, break even or pretty close to the goal for the day. In this one right here, we would have bought the open because it's in the oversold. So you would have bought the open of the next bar right there. That one would have stopped you out. And this one right here, you would have sold the open of the next bar. That would have stopped you out. Okay, so there were plenty of times to get the goal for the day in there. Pretty easy with the red ones. Now, if we get rid of the ultimate slingshot and we'll just remove these red ones and we'll go back to what we normally do. And before I introduce the divergence trades, see with the red ones, you don't have to see anything but what's down at the bottom. You can make a decision based on just seeing what's down at the bottom. But with all of these trades, you have to make sure that you have a higher swing and you have to make sure that you have the ribbon separated. So in this case right here, you would have bought the up close of this bar, which worked out. It pulled back pretty deep, but it would have worked out. You would have bought the up close of this bar, which also worked out. This wouldn't have been a valid trade because the ribbon's all crunched up. So you would have had no trade there. This right here, you would have bought the up close of this bar, which would have worked out to a break even probably. This one right here, you would have bought the up close of this bar, which probably would have been really close to stopping you out to the tick. If it didn't stop you out to the tick, it would have given you the goal for the day, which is good. This one right here, you wouldn't have done because the ribbon's all crunched up. This one right here, you wouldn't have done because the ribbon's all crunched up. So pretty much all those trades were successful trades or break-even trades or no trades. So I guess what I'm showing you here is that either one of them would be good. Yeah, in both indicators. Well, the idea of this, the notion of having this in here on the TV trades range trigger, I like that idea. And then when you plop it on here, you know, you can use this for even these types of trades because you know you got to come out of the overbought, the oversold on these types of trades too. So if I black out the center of this, you know you got to come out of the overbought, the oversold on these types of trades. So anything that happens in the middle is just a distraction. And so it might be useful for me to do that. And what I could do is just give you a range. You can create the range and say, you know, I only want to show things that are above, we'll say 70 or 80, and only show things that are below minus 80 or something like that, and black out everything in the middle. That's, you know, I think I can create that kind of an indicator pretty quick. It's called fill, and I actually use it, you know, in the context itself. If we within the context, the same code is what I use for this stuff right here. Okay, but in that I just give it different parameters to create that fill. So it'd be the same type of thing that I do down here. You would just have to, I'd give you a couple of things in here, values in here. You'd set them and say, you know, black out between this and this, and then you'd only see what gets into the overbought, the oversold. You wouldn't see anything else because nothing else really matters. You know, the one good thing about having the other stuff is that you can actually see ahead of time if you have the separation. That's the one good thing about having the other stuff. You can see ahead of time if you have the separation. So there's some value to having it and not having it. But I'll leave that up to you guys. For now, we just finished what we did on gold, all right? And going back here, if we were to put everything on here again, put this on here, you have the separation right here, so you would have sold the open of that bar. You have the separation right here, so you would have bought the open of this bar. You have the separation right here, so you would have sold the open of that, sold the open of this bar. And you would have sold the open of this bar right here. Okay, and you have the separation here, so you could have bought the open of this bar right here, bought the open of that bar. I think we talked about that this morning. It feels like we talked about that this morning. This one right here, you would have bought the open of this bar right here. And you would have sold the open of this bar right here. Sold the open of this bar right here. So if I spread that out, this is all on gold, so it's $10 a tick, right? You would have sold the open of this bar. This is the one that closed up above, and this is the one you would have sold the open of. So it went down enough to get your stop to break even at worst case scenario. The separation, you could have bought the open of this bar right here, sold the open of this bar, that would have stopped you out right there. That would have been a stop out for sure. Bought the open of that bar, would have been good. Sold the open of that bar, would have been good. And that's it. All right. All right, so that was that stuff. So now let's go on to the next one. All right, move on to the Russell. It's 1:08. All right, I think I started early today, so we have time. If you're watching this on YouTube and you haven't taken a free trial yet, go here to mytradingiq.com. I got to go through this stuff. Go here to mytradingiq.com, sign up, click on the purple button. There's no credit card required for the trial. Click on that purple button. Bring the registration page. Fill this out. If you have TradingView, give us your TradingView login ID. If you don't have TradingView, get TradingView. You can get it for free by going out here to TradingView, trading platforms from mytradingiq.com. Go to trading platforms, watch this 3-minute video, click on this link. It's going to bring you to this page that I already showed you a minute ago. Click it to monthly. It's $14.95 a month after the 30-day free trial. It's $14.95 a month. You are going to have to pay for real-time data. That's $7 a month. Okay, it's worth it. Do that stuff. Okay, so now we're in the next market, right? We're in the Russell. And this morning on the Russell, I think we only took one trade that we got 10 ticks profit on. I think I didn't mark it. 12 ticks profit. I didn't mark it, but we took one trade that we got 12 ticks profit on. I don't remember where it was. But if we go through the trades that were there, and we'll start out with these trades, right? You're just looking for it to come out of the overbought or the oversold, right? Now, when you don't have the slingshot on there, it has to have separation. It has to come from a lower swing, right? So just doing it this way, right here, you don't have anything that you can do in here because the ribbon's not separated. Finally, the ribbon gets separated right here. You could have taken a short right there. It didn't put in a lower swing, but it did make enough to get the goal for the day, I think. Then the ribbon gets all crunched up. You can't do anything all through there. Then finally here, you can take another trade on the up close. Right there, you could take a trade right there on that up close. Get your goal for the day. Over here where it came out of the overbought, another one right there. Did not put in a lower swing, so nothing else along there. Then you get all the way over here. You could have taken this. Okay, didn't put in a lower swing, so you can't do anything again. Then we get into the break. Let's put this back up so you can do that. And right here, you're above the ribbon here, so you're only looking for things that come out of the oversold, and it was only one right here. Put in the higher swing, came out of the oversold again right here with the ribbons crunched up, so you can't do anything with that. Okay, so every one of those trades seemed to work out pretty well.
Graham has a question for you in the question box.
Oh, he does. In or near the weekly trading zone using a separation technique? No. Well, yes, to one degree. I mean, use it as a target. Use the weekly trading zones as a target. All right, but because using the separation technique, you can get your goal for the day in a single bar, then, using the weekly trading zones as targets is good, but preventing yourself from taking a trade does not really apply the way that it would. Okay, but let me just go over this one time again. The risk management is exactly the same, right? This risk management is exactly the same. I know you didn't ask that question, but I just want to make that clear to everybody that's watching here that wasn't in the morning. You're using the same range bars, using the same stops, you're moving the stop to break even after the same, everything in this is the same. The risk management is the same, okay? But as far as approaching the weekly trading zone, a lot of times it's going to go into the zone. And if you're in a bar that's right here next to the zone, you can still take that with a divergence trade. Okay, but if you're taking it with the separation, remember with the separation, you're entering after a full bar later, sometimes 2 full bars later than you normally would, right? Because the divergence is going to get you, I'll draw this because I didn't draw it for anybody that's in here. The way that we normally do it, you have your slingshot, right? Like this right here. And price pulls back, you get into the oversold down here. So when you're in the oversold down there at the bottom, you slide this all over a little bit. Here. Okay, so when you're in the oversold down here at the bottom, that you have a trade coming up, right? When it pops out of the oversold is when you're going to get into it. But by the time it pops out of the oversold, it's already back up here. Right? So if you're going into a weekly trading zone, if you did it when, what I'm talking about, Graham, if it pulls back like this and you're this far away from, it doesn't really matter about the zone. If it's going to go into the zone, that's fine. If it's going to go into the zone. But you pulled back like this, so you're already down here and you're entering, you could have entered up here on the pullback, depending what the separation was like. You might have entered up here, gotten a trade there, and then down here, gotten a trade up to there. Now up here is where you would normally enter. After it's already made this leg up to continue the trend, that's you would normally enter right in here. But we're entering down here. So the zone isn't really that important, but it is good to use for a target. They're still great to use for targets. Okay, and the swing highs and lows and price trying to approach the swing highs and lows and all the stuff that it normally does, you're still using all that. The diamond principle is still a valid thing. You're using all that stuff to manage the trade. Once you get into the trade, you manage the trade. It's just now we're able to get into the trade and trade it from here down to here. And then after it moves, normally we would wait until after it starts to move up and get in on the way up somewhere over here after this has started. But what we're suggesting now is you can trade from here down to here and then change directions right down here, start down here, pick up the move from here to here and stay in it for the move from there to there. Okay. So we're getting an earlier entry. Whereas, like, let's look at one that actually did do it. This is the Russell, so let's just find a scenario here where there was a trade. Here was one right here. Okay, so moving up right here. Well, this isn't a great one because it went sideways a little bit in there. Let me find one that doesn't go sideways. Okay, we'll go right here. Right here. All right, so right here where it pulled back down, over here it's pulling down, it gets into the oversold. So normally when you say, okay, it's getting into the oversold, I'm going to put a buy stop limit on the top of this bar right here. All right, I'm going to put a buy stop limit on the top of that bar. And I don't have the slingshot on there, but let's say the slingshot was like this. So you had this separation right here for the slingshot. You'd be entering down here at the open of this bar is where you'd be entering. Based on that information, you'd be entering right there. Okay. The open of that bar, you'd be entering right there. Rather than waiting for it to come out of there, which puts your entry up here, and you'd be entering down here. You take all that, that's enough to get your goal for the day, probably. Pretty close. It's a 19 range bar, so it's pretty close to getting your goal for the day right there. And then by the time it flips to the next bar and goes up another 19 ticks, you got 2 or 3 times your goal for the day. Okay, so that's what I'm suggesting. When you have the right separation down here, you can jump in right there. If you don't have that separation, you can wait until it continues the trend and get in here because it's still a valid trade. And you're still expecting it's going to get up to the prior swing high at a minimum, up to the prior swing high, right? None of that changes. Okay, so like right here we just got oversold. You would have bought right there on the open of that bar. You wouldn't have waited for the up close right here. You would have been in right there. You wouldn't have had to wait for the up close right there. The up close right there is still a valid trade, and you still expect it's going to get up to here, right? That's if we have the right kind of separation. If I turn this on, we have the right kind of separation, and we do. This separation is good right here. Okay, that's good right there. So you would have bought the open of that bar. All right, so on the Russell today, we had just the one trade for plus 12 ticks that we did somewhere along the way. I didn't mark it. But that was all that we had in there. Okay, now there were a ton of other trades in there, but I'm just going to keep going and we'll get into the ES. Now on the ES, we only had one trade today too. Right, and I did mark that one. Right here, we got 8 ticks in profit on that. Now when I started out the morning, I started it out by just doing the trigger trades. So that's what we're going to call them, right? One is called a divergence trade. This is a divergence when you have the 2 lines down there. And if you just have the trigger down there, it's just a trigger trade. Okay, so we had the one trigger trade. I got the goal for the day just doing trigger trades this morning. And then we had one right there. We picked up 8 ticks on that very first one. And you can see there were a bunch of them in here. There was one there, coming out of the zone, one there coming out of the zone, one here again coming out of the zone. Now this last one didn't put in a higher swing, I don't think, so that wasn't really a valid trade right there, but this one was. And this one back here was. And this one was. And back here, that was a valid trade. This was a valid trade. If you started a little early today, there were a bunch of them. This was a nice leg up here, this move up. It was a really nice trend to be trading in. Now, if we throw the slingshot on there, you had the divergence right here, so you could have entered at the open of this bar, right? Not on the up close, at the open of that bar, not on the up close, right? Right here, you could have entered on the open of this bar, this red one right here, entered on the open of that bar. You wouldn't have waited for the up close on that one. You could have shorted it right here. That would have stopped you out if you would have shorted it right there. But you could have shorted it right there. That would have stopped you out. You going over here, you could have shorted it right here on the open of this bar. That would have been kind of a break-even trade right there. You could have shorted it right here on the open of this bar. That would have gotten you your goal for the day on that one. As we move through here, right in here, you wouldn't be doing anything with the trigger trades, right? Because this thing, the ribbon is all crunched up. So the only trades that you'd be doing in there, and this is where the actual divergence trades shine, is here we would normally not be trading because it's all choppy. The divergence trades are great in here. You would have shorted right there at the top of that bar, shorted right there at the top of that bar, at the open of that bar. You would have shorted, and you would have gotten your goal for the day right there. Right here, you would have bought at the open of this bar and gotten your goal for the day right there. Okay, where normally you wouldn't have any trade until all the way over here. You wouldn't have a trade. But using the divergence, you would have had a trade right here. That could have gotten you some profit. You know, it's a 7-tick range. So you would have gotten 4 to 6 ticks in profit on that. The next one would have been right in here. I think it looks like you probably would have had the bullish divergence. No, I'm sorry, we're not doing the black line. We're doing the blue line first. So right here, you would have shorted the open of this bar right here. And that gave, it looks like it gave 4 ticks in profit. We would have moved your stop to break even, 97.75 down to 96.71. Yeah, I thought we went over that at one point. And that would have been it. Right here, you would have just gone long on the open of this bar right here. You wouldn't have waited until this up close. You would have gone long, sorry, on the open of this bar right here. All right, so it pulled back a bit, but it is starting to move up right now. And that's what the ES was like. So we ended up with plus 8 ticks on the ES. Now the NQ, let's slide this all the way over here. This is today. Sorry, this is all of today. So on the NQ, we started out with a 48-tick trade right there. It was actually a 47-tick trade. And then we followed it up with a 48-tick trade right there to get us to 95. Then we had a break even, and somewhere in here we had another 4-tick trade that got us to 99. But looking at just the trigger trades, right? Only when we're in an uptrend all the way over to here. From here where the morning started all the way over here, you were only looking at things coming out of the oversold. So there was this one, this one, this one. Now the ribbon was crunched up, so you couldn't really do that. This one, which was okay. Okay, and we did do that. This one, which we did do and got a break even. This one, which was still a valid trade and gave good enough. I think that's where we got the other 4 ticks. Might have been. I thought we got the 4 ticks on a short though. This right here, the ribbon was kind of crunched up, so you might not have done that. It looks like if I stretch it out, I don't know if you could see all of them. But did we put in a higher swing? That was the one we didn't put in a higher swing. So you would have skipped that. And this one right here, that was a down close where it pulled out of the oversold. So you probably would have skipped that. And then it turned down. So now in here, you'd be looking for opportunities where it's coming out of the overbought, but you didn't have anything because the ribbon got crunched up. Okay, so you wait until you, well, actually right over here, you could have taken that and it would have stopped you out right there. That down close would have stopped you out. Then it flipped to the long side again. So down here, where it comes out of the oversold, out of the oversold, and out of the oversold. Those are the ones you'd be taking. That one, and this one. And the first two would have been profitable. One had a really deep drawdown, but it would have been profitable. And the final one probably would have gotten break even on. Then it went sideways, so you got nothing in there. Then again, it's bullish, so you're only taking stuff out of the oversold. This first one would have been your only one, and that would have stopped you out. You wouldn't have done another one because you didn't put in a higher swing. Okay, the higher swing is right here. So you could have done this, but the ribbon's crunched up, so you wouldn't. And then you have this right here. Michael, are CFN indicators available on the Newstone? No, they are not. That's now the Newstone is from the CQG. I can't put any indicators on that as far as I can tell right now. So you got to do this. This is the Trading View. Our indicators, all these indicators that you see right here, are available on Trading View. Okay. But Trading View, let me just show you again. To get access to Trading View, you can go here to mytradingiq.com, click on Trading Platforms, watch the video right here, then click on this link right here. You get a 30-day free trial to Trading View. Click on monthly right here. Okay, click on monthly. You get a 30-day free trial. You're gonna have to fill this out and fill out all the stuff that goes with it. And it's a 30-day free trial for Trading View. You're gonna have to pay for real-time data. The real-time data costs $7 a month plus tax, depending on what state you live in. But it's $7 a month for me. So you're gonna have to pay $14.95 plus $7 a month to get the Trading View charts. And the $14.95 a month is free for the first 30 days. $7 a month is not. You're gonna have to pay that $7. Okay. But when you get this, if you're not familiar with Trading View, there's not really a lot to it. If you're doing the divergence setup, then nothing about price really matters. You don't really have to be concerned about the indicators on price. This is what you're concerned about down here. And so you can have this running down here. And to get this running, all you need to do is go here to mytradingiq.com, and on the trade rules page, if you go down to right here, see the URL right here is 6JUNAIR. See the URL right here is 6JUNAIR. You get my charts exactly. All right. So you don't have to worry about learning how to set things up or anything like that. Just go here, click on that link, and get a copy of mine. It'll say copy in the upper right-hand corner. Click that word copy, and it'll be a copy of mine. Now, to do that though, you have to have the plus or the premium version to do that, because I have 4 charts. But to get just 2 charts, click on this one right here. That's the essential users. That's just 2 charts. All right, that's the $14.95 a month one. You can click on that and get the charts all set up, pre-set up for you. If you want to do the free one, click on the free one right here. That's just 1 chart, and that'll be all set up too. But really, the free one is not worth doing. I mean, it's worth doing if you're not going to ever try to get real-time data. But if you take the free version of the charts, then they charge you like $30 a month for the data to get real-time data. So you're better off paying the $14.95 a month to get the real-time, to get the charts, and then the $7 a month on top of that. So you get $22 a month, and you get the charts and the data, and you get a lot more with the charts. You get to use a bunch of different indicators, and you get to have custom intervals, and you get to have a lot of things. It's just worth it to do the $14.95 a month plus the $7, then try to do the free plus the real-time data. They kind of hook you in that way. Okay. I don't know how many of you guys knew that, but if you go get the basic version, which is the free version of charts, you can go back and do hindsight looks on that all you want. But if you're going to pay for real-time data on top of that, the real-time data costs like $30 a month if you do it that way. All right. So on the NQ, I think I went through everything that got us to 99 ticks, right? We only have 4 minutes left in here, and I have another webinar that I got to prepare for this afternoon. So if we were to put this on here and just bounce through here, only looking at the overbought and oversold, but where there was separation through here, right? And what you see is right here, where the blue comes up by itself, you don't see the black. The blue comes up by itself, you don't see the black. Those are the trades, right? Every time you see that blue by itself without the black, those are the trades. So like right here on the bottom, you see the blue without the black, you'd be buying the open of the next bar right there, buying the open of that bar. Okay. And right here, you see the blue without the black. I'm looking down, I'm not even looking at price. You'd be selling the open of the next bar. So you'd be selling right here. Right here where it is right now. You would have sold the open of this bar right here. Right, and that dropped down about 5 points, I think. 94 down to 88.5. So it dropped down 5.5 points, 22 ticks. Okay, over here, you would have been selling the open of this bar. The open of this bar, sorry, it would have been the open of this bar. So that went from 2350 down to 1925. So that went down 4 points, 16, 17 ticks. And this is a good example of how buying or selling the open of the next bar is what you really got to focus on. You don't have to be on top of your game. You don't have to have a buy stop limit order waiting. You can wait until it closes and get your order in the right place and just get filled. But there weren't a lot of individual ones that popped down all by itself, like this one right here where it popped down all by itself and it didn't slide sideways a little bit. There weren't many of those like this that just go up and down. Usually there are. And I'm keeping it simple by only making it be the blue ones, but you can get these where the black ones actually lead, and those work out okay too. But for right now, we'll just keep it simple and say the blue one's going to be the one that leads, right? Because the TV trades trigger is usually faster. So, like right here.
You just redefined the electric slide.
There's the electric slide. There you go. It's right there. See, there and down here. Now I don't know what that looks like on price, but I bet it looks pretty darn good. We'd be selling the open of the bar after that, selling the open of the bar after that, buying the open of the bar after that. Now you don't know that it's going to go up and down like that. It could go sideways like that. All you know at the time is that you have this separation right here, and that is in the oversold. You don't know that it's going to bounce right out of the oversold or the overbought. So that's where you're taking your chance right there. Okay. But when you look at it, you're buying the open of the next bar. Bang. In this case, buying the open of the next bar. And it slid sideways on this one. So it pulled down a little bit after you bought the open. The open was way up here and it slid all the way down here and then it moved up. But this one right here, you're selling the open of the next bar, which is right there. Selling the open of the next bar, which is right there. You see? All right. Well, I have run out of time. So you see one just happened right here would be buying the open of the next bar right there. Right. Now that's the combination of the TV trades, range trigger, and the ultimate slingshot. All right. If you have not taken a free trial with us, go out here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Click on that purple button, and that will bring you to this page, the registration page. Okay, fill out this form. You'll get your indicators indicating for you. All right, and that's it. With that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready, but I do want to share with you real quick. MicroStrategy's S&P 500 odds rise on Bitcoin after NASDAQ 100. MicroStrategy will likely enter the NASDAQ 100 index on December 23rd, and we expect net buying of at least 2.1 billion in shares by ETFs to follow, equal to about 20% of daily volume. Joining the S&P 500 will be tougher because of a lack of profit, though an accounting rule change surrounding Bitcoin valuations could make MicroStrategy eligible for the S&P 500 in 2025. So it's getting added to the NASDAQ 100, and next year it might just wind up in the S&P 500. That's kind of a big deal.
It is. I mean, I don't want to say we're missing the boat on it because you've been talking about MicroStrategy for a year, but I think they're doing things that a lot of other companies are not doing right now, and I think when the dust settles over the next 4 years, I think MicroStrategy is going to be right on top of everything.
I was shocked yesterday. Microsoft held a shareholder vote on whether they should start building a Bitcoin treasury like many other companies are doing. And from what I gathered, the shareholders were kind of in favor of it, but the board of directors came on the call and encouraged the shareholders to vote no. So they ended up with a no vote.
Interesting.
And then we hit 100 grand today.
Yeah, I don't know what they have to lose.
There's some ticked off Microsoft shareholders today, I guess. I don't know.
Yes. Michael R., are you in here? You are in here. I just saw your messages come through. I don't know what they said. I have a whole bunch of text messages that I gotta get caught up on. What did you do? It says, oops. This indicator cannot be applied to another indicator. I don't know what you did on that one. I've never seen that before.
Well, let you get on with your business by asking you the all-important question.
Recap
of the morning session.
Today it took, I think it took 4 minutes and 2 trades. No, I had to revise that because I only did the one trade. We had 2 trades on at the same time, but the NQ happened first. So it took 4 minutes and 1 trade to get to $2,820 this morning.
Good job. I was there. Saw it live in real time.
Live in real time. All right.
All right. I'll pull it back.
Thank you all. Okay.
Or did I already pull it back?
You got it now. Well, almost. There you go. Now I can see your charts.
Okay.
All right. Excellent.
I got thrown off there. Okay. All right. Well, you do your thing, and I'll finish doing my thing.
Excellent. All right.
Wait
we'll talk later.
Why am I still seeing your chart? Oh, I'm not. I'm seeing my trading view charts. Never mind.
Yes, your trading view charts.
Yeah. Okay, guys, up here. Look up here. Don't look down at my other monitor because you can't see that. Okay. All right. Here we go. The Russell opened, came right down to the short target. The low of that candle was 23.86 point. We missed it by a tick, by 1 tick. Now, market structure. Why'd price stop dropping there? Well, you usually just gotta look left. So support will always send the market looking for resistance. And we got almost all the way to this zone, but we missed it by 6 ticks. Yeah, 6 ticks. But nonetheless, we found resistance, and if we go over here, we look at that high. There you go. There's your reason. Even created a double top in today's session. Remember, the vertical line separates today, Wednesday, Tuesday, Monday. Okay. The Tuesday open, which was Monday night at 6 p.m. Eastern. You see how we just consolidated along the weekly trading zone? That's what happens 70% of the time when price encounters a zone. 20% of the time you get this rejection. 10% of the time, the slice. That's when a 30-minute candle slices through a zone like it's not even there. And when it runs out of steam, it will retrace back to the zone it sliced through, and in most cases continue in the direction of the slice, as it did here. So anyway, after bouncing off support at the short target, we had a heck of a run. Wow, that's something. But as I told you earlier, and every day, price always reverts to the mean. So it had to come all the way back down here to find the BBC. In our case, the mean is green. We call it the BBC, stands for Bull Bear Cross. Okay. The pullback held. Yes, we spiked it, but it held because both candles are touching the line. And off we go with a leg and a retracement. Now notice how on this pullback, the long target became support. That's such a common thing. Keep an eye out for it. And then that launched us here, where we got up to 24.12.30 versus 24.12.40. 1 tick difference. But that's a lower high. Now, the step lines on the left side are blue and climbing. So this thing could catch a second wind. If it does, if we break above this zone, make sure you are aware of this bearish cross that happened on Monday. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. Down here we had a bullish cross. That's an extended move, and the price came right back to that area and found support. Now, this bearish cross, we just powered right through it. Now, if you'd been watching it live in real time, we might have hit it, backed off, and then ran at it again, because these are 30-minute candles. But because I didn't see it happen live in real time, I'm just going to say we sliced through it. Okay? Okay. NQ, all-time historic high. And that's not the highest weekly zone. The highest weekly zone's up at 22,201. And we still got 2 days to get there. Rest of the day, and Thursday, and Friday. However, notice that on the way up, as the NASDAQ rallied, you had the perfect stack. Price, step line, blue and climbing, BBC. Now what's changed? Glad you asked. The step line was on the left side of blue and climbing, but now it's on the right side of blue and climbing. And what does that mean? That there's a high probability the price is going to retrace back to the BBC or revert to the mean. Okay. We opened last night, just consolidated along the zone till 8 this morning, and I think we had important news at 8:30, and of course that was obviously very bullish. And now we're consolidating at a zone. See how we consolidated at this zone? This zone, we just kind of ripped through it and never looked back. That happens. Okay. All right. That brings us to crude oil, which is on, see, the low of the session. 68.44. 69.44 is $1,000 per contract traded. If we get to 70.44 today, that would be $2,000 per contract traded. From the open last night. And it looks like it might want to go there. It really does. The highest weekly zone for crude is up at 71.40/45. And the step line is on the left. Now notice here, see how the step line crossed? And what did we do? We pulled back to the BBC. Twice. And it held both times. And now that we have got a second wind, I guess, here we pull back to blue and climbing. That held as support. And so the step line has not crossed blue and climbing. If this consolidation pattern had continued sideways, then the step line would have crossed. But there's fresh energy here. So as long as the step line stays on the left side of blue and climbing, it's kind of like directly above it right now. But if price keeps climbing, it's going to pull it away from blue and climbing. So might be more information than you needed, but no extra charge. We opened right on top of the BBC and made a run right up to the long target. Punched through it to the zone. Now, what's the high of this candle? So This actually hit the zone at zone 6885/6890. The high of this candle is exactly 6890. Okay, so can't really say it sliced through. However, when the step line crossed, see how blue and climbing became resistance because it was on its way to becoming red and falling, which brought us right back to the VBC and to the top of the long target. I'm telling you, when you power through one of these targets and price retraces, that target will often become support. And if the price is moving down, it will often retrace right back to the target and it will become resistance and send it back down. I try to point it out every time I think about it. But just look at the week here on crude. Now these zones are published Monday morning at 6:15 a.m. Eastern. On the 14th of this month, oh, that's 3 days from now. So that's a Saturday. Okay, so on Saturday it will mark 15 years that we've published the weekly trading zones every week for our members and trial members. And that's a long time. And what have I changed about the zones over the 15 years? Nothing. Nothing. Support to resistance, back to support, back to resistance. Yeah. Let's pull back to the BBC. Technically, you got one little candle that opened and closed below the BBC. But it couldn't take out that low. And if it had, you would have expected support right here at this bullish cross where the blue line got above the green line. See, I use market structure for everything. And when you become a member, passport holder, use the Logic 247 alerts. Yeah, you can trade them. That's okay. I know in the past I've discouraged. What I've tried to get across is use the Logic 247 alerts to learn how to read the chart, to learn how to know where to expect support, where to expect resistance, and how to define the windows of opportunity in between. Okay, so support to resistance to support to resistance. Now, once the weekly zones are published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. Like gold, which is above the highest weekly trading zone. Notice the step line has crossed. We're painting a red candle. We expect a retracement back to the BBC. Now, people always ask, when this kind of situation happens, so now what do we do? Well, you just trade what's in front of you, knowing that you're above the highest weekly zone, and that by close of business on Friday, that would be 5 p.m. Eastern, based on 15 years of history, we expect price to be at or below the highest weekly zone. Does it always happen? No. Does it happen more often than not? Yeah. Yeah, it does. But there are weeks, okay, where one of the markets or two of the markets may close above the highest weekly zone or below the lowest weekly zone. I think we had a couple weeks ago. I think it was the week of the presidential election. We had a ton of stuff that closed above the highest weekly zone. That was highly unusual, but that was a highly unusual event. So, anyway, but for today, right now, I would expect a retracement back to the BBC, and then the question becomes, does it hold or not? As I've told you and showed you, the pullback holds more often than it doesn't, but eventually it will trade through. Will this be the time? If it does, then you got another support level right here. See, on the way up, that zone was resistance, but coming back down, it becomes potential support. And if it trades through, you got a bullish cross right here. That's potential support. Right where the blue line crossed the green line. It's pretty doggone reliable. I gotta say. I gotta say. All right. So this was the opening candle, and then you can see it just ran right up to the long target. Now, with crude, we use this candle as an example. Now remember, these targets came out the moment the markets opened last night on this candle. But let's just look at this candle. This candle opened at 2723.8. So let's just call it 2724. That's a $400 candle per contract up to the target. That little candle right there. From the open to the target. Looks like it might have gone a tick over the target. Oh, I'm sorry. According to this, oh, not the high. I need the close. Yeah, we closed one tick over the target there. But then the next candle came right back down and found support at that target. And that propelled us up. Step line crossed. Down we come. Consolidation. Bada boom, bada bing. Hey, I like movies that have to do with life in London during World War II. If you have a favorite on Netflix or Prime, share it with me in Telegram or in here in the question box. I almost hate to say this, but I really like movies like Goodfellas. Now, there's only one Goodfellas, and you can only watch it so many times. But there might be a similar movie you know of that I don't know of that I would enjoy watching. So, if you think of something, let me know. All right, we got one less market to look at. We hit the zone, and that's the highest weekly zone for silver. Step line crossed, blue and climbing. See, on the way up, perfect stack. Price, step line, blue and climbing. Now this one candle right here opened at 32.84 and ran to 33.12. So I'm going to go 15, 12, 27. That's about a $1,300 per contract candle right there. And I did that math in my head, so it's not perfect, but it's pretty close. So the step line crosses, and here we are at the BBC. Here, let me do it, Michael. From this low to that high. Boom, we're right at, the BBC is right at the 50% fib retracement. Now, if the next candle opens and starts printing green, this won't turn to red and falling. But if the next 30-minute candle starts printing red, this is going to turn to red and falling. And so if price gets below the BBC, be aware of this bullish cross right here. Because if price comes down here, that's probably going to be good support the first time down. Okay. Okay. Let me get rid of this so I don't confuse myself later. So everybody, now, okay, we got a red candle. That was the opening candle. Everybody already had the targets, okay? But you're above the BBC, and as long as you're above the BBC, you got to be thinking long. So maybe you wait until it turns to blue and climbing, okay? So this candle here, is that the one we already did? It opened at 32, we'll call it 32.70, and it ran up to 32.75. Okay, that's 5 pennies. That's $250 per contract traded. This is the one we were calculating before. But just that one little candle right there. Even that little, you only need 2 pennies in silver to get your goal for the day. This is going to get interesting, okay? Because right now there's no sign of relief that this thing's going to bounce. The pullback holds more often than not. When we came off the short target and pulled up to the BBC, we spiked it real good, but it ultimately held until it didn't. So I wish we had the time to just hang out and watch this, but we don't. Boy, I got to say, the daily chart, the way it changed from that original chart I posted in the discussion group today. New all-time historic high today in the NASDAQ, and I cannot rule out a new all-time high. I mean, we'd have to move a lot because the all-time historic high is 61.11. And today's high so far is 61.02.5. Well, that's only 9 points. So yeah, it could happen today. But because blue and climbing is directly above price, see, on the way up when they're like this, that's bullish. But when blue and climbing gets directly above price like that, it's potential resistance. Because if we don't break through it, if we just open at night and go sideways a little bit, that's going to turn to red and falling. So, okay. You've been very kind. Let me tell you how you can become a passport holder. Send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name and your phone number. We're not going to call you. We don't have some phone room that calls and hammers you and twists your arm and blah blah. We've never had that. We've been doing this since 2008. Actually, since 2006, but in our current format, really since 2008. And we've never had like a sales force or a phone room, following up on leads and calling people all hours of the night. We just, we believe we're doing what God would have us do. And so the right people will be attracted. That's also one of the reasons why in our discussion group, it's just a bunch of happy campers sharing with each other, helping each other, because they're drawn to what it is we offer. We're not twisting anybody's arm. It's those chat rooms that you go in where people are moaning and groaning and complaining and cursing and competing with one another and stabbing each other in the back. That's because they got lied to, they got their arm twisted. Uh, in fact, they were given some kind of payment plan, right? And then the company sold that contract to a factoring agent. So now you don't really own the money you don't owe the money to XYZ Trading Company. You owe Bill Collectors LLC. They sell the paper at a discount because they know you're going to probably fall out after a couple months. But Bill Collectors LLC, they don't care whether you learn how to trade or not. All they know is that they bought a contract where you promised to pay $10,000, $20,000, and they're going to collect it. And you can tell them all day long, but I didn't learn how to trade. Well, sorry, Charlie. That's not my problem. I paid $5,000 for this paper, and you're going to pay me my $10,000 if I have to come to your house and get it. So don't stay away from those places. I'm not saying we're the only place in the world you can learn how to trade. No, I'm not saying that. I'm just saying we treat everybody with dignity and respect. And we require the same in return. And that's only fair. Okay? So, send your email to support@cfrn.net. And our price is so low, if it's out of reach, you probably shouldn't get into trading right now. What you should do is you should, work hard, build up a little nest egg, okay, so that you can afford to become a passport holder and still have money to trade. Because in the beginning, you're not going to trade real money anyway. You're going to follow our 24/20 blueprint, hopefully, okay, and you're going to trade in your sim account until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with one contract. Now that you're trading one contract, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The big difference between the first contract and the second contract is the first contract is funded with your startup capital, the money you opened your account with. Hey guys, in the discussion group, that thing doesn't work. I know it's frustrating. I wish they'd get rid of it, but that bot don't hunt. So, anyway. Okay, so the difference between the first and second contract. Your second contract is added with profit you earned in the market. Only the first contract is funded with your initial startup capital. But again, you don't go live right away. You got to learn the strategy first. And, we're not going to come to your house and watch you. So, it's your money. If you want to gamble, go to Vegas. They have attractive cocktail waitresses and free cocktails and all kinds of stuff. We don't have any of that. You need to trade in sim until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Then the blueprint's going to give you the green light to go live with one contract. And then you're going to earn the money to add a second contract. Then you're going to earn the money to add a third contract. And so, our goal for the day is like only 2 points in the ES, $100. 10 ticks in crude or gold, $100. I know you can't live off $100 a day, but by the time you've earned the right to trade 5 contracts, that's $500 a day. Most people can get by on that. At 10 contracts, those same 2 points are now worth $1,000 a day. If you can't live on that, you probably need like debt counseling or something. Okay? So this is no get rich quick. It's learning how to trade. And the beautiful thing about learning how to trade is once you learn, nobody can ever take it away from you. And everything we teach is fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, we trade every market exactly the same with the exact same indicators. 9 out of 10 new traders fail because they don't have anyone to teach them how. That's where we come in. 2 hours of live training every trading day. It's an interactive environment. You're trading along, asking every question that pops into your head, and you're getting an answer. Okay? On top of that, you've got access to private one-on-one mentoring at no extra charge. The strategy you learn, the indicators that you own as a passport holder, they're fluid across all markets, all time frames. You'll get the Logic 247 alerts around the clock. You'll get the concierge trade alerts every evening, the second they're published. Every Monday morning, you'll get the weekly trading zones at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. And if that weren't enough, you're going to get the golden keys to open all the private channels in Telegram, and you're going to have around-the-clock support. Everything a trader needs, all under one roof, one low price. It all begins when you send that email. Now, when you send that email, I want to become a member, you're going to get an email back with lots of information and a link that you can click. Once you read the information to make sure that what you're getting and what we do is right for you, only then should you click that link and make your payment to actually become a passport holder. Okay? Then, after you do that, you'll get several emails. File them away. They're chock full of information that you're going to need later. You'll need some of it now. Some of it won't even make sense to you. But as time goes by, it'll make sense. And it's just more convenient if you know where it is. I mean, if you lose it or delete it by accident, of course, we'll resend it to you. Okay? But you can see this ain't my first rodeo. What do you say we wrap this up with our good word for the day? I vote yes. Yesterday, follow God and take your children with you. Today, shut yourself in with God. Psalm 42:1. I long for you, O God. Let me just ask you a question. Let me get personal. Do you? You're going to do what? Do you long for God? See, as a child growing up, my grandmother took me to church every time the doors open. Wednesday night, prayer meeting. Thursday night, choir practice. I didn't even sing. Sunday morning. Sunday night. And then every few months, a revivalist would come to town. And you had to go every night of the week. And I felt like I was being forced to go because, like, that's the rules of Granny Reeves, that's the law. And so, I mean, I went out of respect. But I didn't. I went because I had a relationship with my grandmother. I did not have a relationship with God or with Jesus. So that psalm right there, Psalm 42:1. I long for you, O God. Do you? Are you having difficulty understanding God's ways? We all struggle with that. Even though we can look back and see how his hand of blessing and guidance has been upon us, at times we still feel afraid and alone. Jesus himself cried out in Matthew 27:46, my God, why have you forsaken me? Those words could be interpreted as, I may not understand what's happening right now, but I know you're still my God. That's some kind of assurance when you're hanging from the cross. Have you ever watched a child reach for a parent's hand and say, slow down, you're walking too fast? The child is afraid of getting lost or left behind. Is that maybe how you feel today? Like he can't keep up? That life is moving way too fast? The Bible says in Psalm 42:1, as the deer longs for streams of water, so I long for you, O God. You don't long for something unless you value it and need it. Only raw need will cause you to turn away from every other visible means of support and pursue God, because you know that without him, you're not going to make it. The truth is, if you didn't need him so desperately, you could easily become satisfied with lesser things. 3 things happen when you pursue God with all your heart. Number 1, you enter the realm where all things are possible. Mark 10:27. Number 2, you grow more Christ-like because you become like the company you keep. 2 Corinthians 3:18. Number 3, you learn that certain levels of blessings are only reached when you diligently seek God. Hebrews 11:6. Are you weary of human answers? Do you need more than just good advice? Shut yourself in with God today and let him speak to you. There's a scripture, be still and know that I am God. And I know you might say, you know what, I got a job, I got a family, Christmas is coming, I got to buy all these gifts, I don't know how I'm going to pay for them. You don't have to be a hermit and go live in a cave. Just take 5 minutes. Go in the bathroom, even if you don't have to go. Shut the door. And you can leave the lid down. Just sit down. Leave your phone somewhere else in the house. And if you got one of them watches, take that thing off too. And just be with God. Now, I know we build these great cathedrals and these huge churches with stained glass. Yes, God will meet you in those places, but he'll also meet you in that bathroom. Speaking of cathedrals, I long to go to Notre Dame. My wife and I were there many years ago, I think 2007, maybe early 2008. That's before it burned down, literally burned down. Oh, the history in that place was just amazing. And Trump just visited. So I don't want to go because Trump went. I want to go because I want to see how they restored it. My wife and I, we sat glued to the TV watching that thing go up in flames. And because of the traffic congestion in Paris, it was like 2 hours before the fire trucks even got there. They couldn't get through traffic. Everybody was trying to go see Notre Dame burn, and that kept the fire trucks from getting there and preventing it from burning. I did a lot of yelling at the TV that night, but anyway, I'm just amazed that they were able to put it back together again. But the rich history there remains. If you ever get a chance, you ever looking for somewhere to go, after you take a trip to the orphanage in Kampala, on the way home, stop by Paris and go see Notre Dame. And that's our good word for the day and my mindless ramblings. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Man, why won't that thing work right? All right. See you tomorrow.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.